Hi guys, today we are going to learn about existing and non-existing events. So let's understand why do we have existing and non-existing events first. So let's say the company has a year end of 31st March, right? So the accounts are prepared as per that year end. Now, that financials or the company's financials are presented to the shareholders at a later date when they are approved by the board of directors and the shareholders. So, when in this process, let's say 31st March is the year end and they are approved on 31st July. So, in this period, if anything occurs between this period, this needs to be adjusted or not adjusted. That is the call that the management takes based on the criteria. So, IAS 10 events after reporting period determines that which of these things should be adjusted and which of these things should not be adjusted. So we will learn this first, that what are existing events and what are non-existing events. So basically existing events are nothing but events which provide a evidence at the reporting period and that occur after the year end. So before the reporting period, there is a evidence of that event that it can occur after the year end. That is nothing but existing events. Now non-existing events are nothing but the events which do not provide a evidence before the year end, or the management doesn't know that this is going to occur. There is no evidence before the year end that this event is going to occur. That is nothing but non-existing. We will have I'll give you a short or simple example for both of these things. So basically existing events can be classified as a court case. So the company knows that the court case is going on before the year end, and after the year end there is no outcome. Now when the financials on 31st July, when the financials are approved, between this period, 31st March, 31st July, between this period, if there is an outcome that is given to the management, now this is termed as existing event. Why existing event? Because the evidence was existing at the year end that the court case might go on and there is some possibility that the compensation might be paid or not be paid. So this is nothing but existing events. The evidence was occurring before the year end. Now, let us take a simple example of non-existing event. What do you mean by this? So, non-existing events after the year end, there is a tsunami and the entire warehouse of the company is destroyed. Now, the management can't have a evidence before the year end the tsunami is going to occur. For the court case, they knew that the court case is going on, there is going to be an outcome. So, this tsunami or natural calamities is one example of a non-existing event. So all of these are termed as existing and non-existing, and according to their evidences, if they have a evidence before the year end, if they have a existence before the year end, then they are adjusted in the financial statements and then they are issued to the shareholders and the general stakeholders. So these are nothing but the explanation and the meaning of these things. So all of these criteria and all of these principles are stated in IAS 10 events after reporting period. Thank you so much.